Welcome. In this video, Zbcn coin new peak is coming very soon. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When carefully examining the chart, it becomes clearly observable that the price has been consolidating for a certain period and is gathering strength for a larger move. At this point, one of the most prominent technical formations that stands out is the flag pattern. In the current setup, this flag formation notably continues to maintain its solidity and structural integrity. This situation signals a highly positive outlook from a technical analysis perspective, suggesting that as long as investors remain patient, this pattern could bear fruit in the near term. Flag formations are typically characterized by a short-term horizontal or slightly downward-sloping consolidation phase following a strong upward price movement. During this consolidation period, the price fluctuates within a defined channel. However, these fluctuations are essentially indicative of an accumulation phase. One of the most important features of this pattern is that it often results in an upward breakout at the end of the consolidation phase. And the current technical outlook strongly supports this expectation. In particular, under current conditions, it is evident that the price is moving steadily within this flag-like structure, with the lower trend line continuing to serve as support and the price increasingly testing the upper resistance line. These repeated touches indicate that the price is beginning to challenge the upper resistance and that the selling pressure is gradually weakening. This is an important technical sign suggesting that buyers are gaining strength in the market and that the price may be preparing to test higher levels. Flag formations are inherently known as continuation patterns. This means that the consolidation process that forms within the pattern is typically followed by a continuation in the direction of the previous trend. In the current case, since the pattern has formed on the back of a strong upward movement, this technically increases the likelihood of an upward breakout. The price repeatedly approaching the upper band of the flag further supports the possibility of a breakout happening soon. Another noteworthy aspect is that the formation remains intact. In technical analysis, the validity of a pattern not being compromised provides confidence to investors and helps facilitate strategic decision-making. Specifically, the fact that the lower boundary of this flag continues to act as a support and that the price has not broken below this line shows that the structure is based on a strong technical foundation and that buyers are defending these levels. Additionally, when we examine the internal structure of the pattern, the decline in trading volume stands out as a key element. This drop in volume, commonly seen in flag patterns, can be interpreted as the calm before the storm. As volume contracts, price tends to consolidate further, creating the potential for a more sudden and powerful breakout. In this context, the price remaining within the flag while volume decreases could be a sign of an impending breakout. But we cannot rely solely on the pattern for our analysis. Let's also take a look at other metrics. Stay tuned. When analyzed in depth through the lens of technical analysis, the current price movement clearly points to a classic structure within the context of the Elliott wave theory. In particular, the fact that the price is currently forming the second wave indicates that the foundation is being laid for a potentially strong upward wave in the future. In this context, the current sideways or stagnant price movement should not be seen as uncertainty by investors. Rather, it should be interpreted as a preparatory phase for a much larger rally. According to the Elliott wave theory, market price movements occur in a specific cycle consisting of 5 main waves. The first wave typically represents an initial move, while the second wave is characterized by a healthy correction or consolidation following that initial advance. In the present case, it appears that such a structure is indeed unfolding. The sideways and relatively low volume behavior currently observed following the initial upward movement of wave 1 aligns well with the characteristics of a second wave. This structure clearly shows that the price is in a short-term resting and accumulation phase. Second waves are often misunderstood by investors because during this period, the market neither rises significantly nor declines sharply. However, according to Elliott theory, this is a healthy and expected development. During this time, market participants reposition themselves, weak hands are flushed out, and stronger investors patiently hold their ground. Technically, this creates a foundation that increasingly supports the potential onset of the third wave. Once this sideways phase concludes, the third wave, considered the strongest and most dynamic wave in technical analysis, is expected to begin. Third waves typically represent the period when market sentiment turns decisively positive, investor confidence is restored, and buyers re-enter the market with strength. As a result, this wave is often accompanied by high volume, and candlesticks tend to be long and decisively upward. The current period of sideways consolidation may be seen as the beginning of this major move. The fact that the price is staying away from oversold territory and is not deepening its correction suggests that investors still hold a positive outlook for the market. At this point, technical targets for the third wave become critically important. According to Elliott wave theory, the third wave typically extends to 1/618 times the length of the first wave. However, in strong markets, this ratio can stretch to 2/272. Based on the current analysis, both of these levels appear to be reasonable and achievable technical targets. Should the price complete its second wave correction and transition into the third wave, Fibonacci extension levels offer realistic and positive projections for the upside. When the technical outlook on the chart is carefully examined, the signals given by the MACD indicator appear highly noteworthy and promising. MACD is one of the most widely used and trusted indicators in the world of technical analysis for identifying market direction, momentum, and potential trend reversals. It is a fundamental tool that investors rely on when forming both short-term and medium-term strategies. In the current setup, the signals from the MACD can be interpreted as a potential precursor to an upward movement in the days ahead. At present, the MACD lines are in close contact and are on the verge of making an upward crossover. This formation is often referred to in technical analysis as a bullish crossover, and it is typically seen as a strong leading signal that prices may make an upward move, especially when the MACD line is about to cross above the slower signal line, and if this crossover is occurring as the indicator transitions from the negative to the positive zone. It is generally considered a powerful buy signal. This dynamic is clearly evident on the current chart, drawing investors' attention to this region. Such a MACD crossover provides a valuable indication that buying pressure is increasing and that sellers may be losing their grip. This is because the MACD indicator is based on the divergence from average price values, and the interaction between its lines shows which direction market momentum is leaning toward. An upward crossover reveals that prices may be gaining bullish momentum in the short term, which could potentially extend into the medium term as well. This type of MACD structure often signals a turning point in the market. Bullish MACD crossovers that occur after prolonged sideways or downward trends are frequently among the clearest leading indicators of an upcoming uptrend. Additionally, an upward crossover reflects that investors are leaning toward a buying bias and that overall market sentiment is shifting toward optimism. In this context, the potential MACD crossover will likely have a positive impact on the market, both technically and psychologically. Furthermore, the price level at which this crossover is forming also aligns with a highly strategic zone. When a MACD signal forms at a support level or near a key Fibonacci level, it adds to the strength and reliability of the signal. Ignoring MACD crossovers can cause one to miss both rallies and declines. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.